European markets marking time ahead of tomorrow's ECB meeting. Craig Erlam is senior market analyst at Oanda and joins me from London. Craig, what's behind today's trading action in terms of the bounce after a few days of declines?
I think there's a couple of things really. One, of course, can be related to the moves in oil. We've seen numerous times this year that movements in oil have really dictated overall sentiment and large parts of the moves in equity indices. The other thing as well is we are in a month in which we have seen some quite strong gains in equity markets. If we take a look at the broader gains over the past month, they actually erased the majority of the losses that we've seen since the start of the year, which is quite phenomenal considering at the start of the year we were talking about markets being entering bear market territory. The DAX being one of these that was down almost 30% over the last year or so, and now we are seeing it make these substantial gains. So I think what we're seeing, I guess, today is a continuation of the gains the strong gains which we've seen over the last month.
So the question is that all going to change after the ECB meeting? What are you expecting in terms of a possible rate cut, and how will that impact the markets?
I think that's going to be a very interesting meeting. I think if we take a look at December, for example, people expected Mario Draghi to return with the fabled bazooka, and instead he fell well short of expectations and really fell well short of what he'd hyped up the markets into believing he was going to achieve at the meeting. But this meeting, again, we've seen a lot of speculation that we're going to see the bazooka unleashed once again. I think markets are kind of approaching it with a cautious optimism. I think there's to an extent you're thinking, well, they surely aren't going to make the same mistake twice. We saw what happened in the markets last time after they disappointed. Surely they can't make the mistake twice. But clearly at the same time, Mario Draghi does not have the influence within the ECB that he would like to make people believe. And I think the markets are well aware of this. So I think really we're entering this decision thinking we're probably going to see at least a 10 basis point cut to the deposit rate, maybe even 20, and hopefully further stimulus as well, be it additional quantitative easing or maybe just an extension to the timeline that we're expecting for quantitative easing. I think what's priced in right now is going to be a 10 basis point cut and a slight extension to the easing program, but possibly the potential for even more.
Is it possible, if there is something that is disappointing out of the ECB or surprising, that this recovery in the stock market you've been speaking of could get derailed?
Absolutely. I think we've got to remember that while the moves over the last month have been very positive and very strong, like I say, I don't think we can underestimate just how positive and just how fierce the rally has been over the last month, considering what we saw at the start of the year. I think they can quite easily be derailed. Sentiment is still extremely fragile. If we take a look at the global economy, there's still a number of risks and headwinds facing markets this year, China being one, the US path of interest rates being another. There's a number of possible headwinds and risks facing the global economy this year, and it does sometimes just take these small moves to derail. We saw what happened earlier in the year with the movement in the Chinese yuan was the trigger point for a large part of these losses that we saw. And if the ECB under-delivers once again, and we've seen the markets being hyped up over the possibility of this stimulus, then there is potential for the markets to fall off once again.
Craig Erlam, thanks so much for your time.
Thank you.
I'm Rhonda Schaffler for TheStreet.